Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for Tuesday, October 7th, 2025. A lot of things going on in the market, and most of them were lower today. Oracle probably shocked the market when they talked about their margins on cloud and whether or not their rental of NVIDIA and what they're doing with it is actually making money or not. But just like the APP story of Monday, which caused significant volatility in that stock, I think it's more the fact that the market's so overbought in certain areas that the littlest piece of news is going to cause some type of a pullback. And what we saw today was, ended up not that bad. Um, NASDAQ down 0.67 on lower than average volume. That's nothing. The Dow down zero point 0.2 on the S&P down 0.38. NYSE volume was a little bit lower than normal. So I think consider that was a low volume day and we're in this crazy news cycle. Maybe it's just a shot across the bow of the bulls. And what does a shot of the bow across the bulls mean? Back in World War II or in any naval battle, or if you're sitting off the coast of Somalia and you have some pirates running away and you want to stop them, you don't have to kill them, which is what we're doing in Venezuela. You just shoot a couple of shots right in front of them and they get the message and they stop. So was this a message for the bulls to back down? Not a surprise. What did I say the last two trading videos? That I bought shorts on or shorted um, diamonds, triple Qs, and the TNAs. Why? Because I thought we were due for a pullback. We talked last night about the divergences, how the RSI divergences, the divergences on AD lines, and that this market's likely to pull back to the 17 or the 50. So that may have started today. The question is, does it get any worse? So again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group is called Top Down Trader, and my website, which is still a little bit under construction, is marketmripro.com. I always start with a short video. This is for educational purposes only, short PowerPoint rather. Anything I talk about is just to show you how I use my tools. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools in multiple platforms. My Google group is called Top Down Trader. If you join it, you get discounts on my tools. You get invited to meetings that I don't invite the rest of the YouTube world to. Just go to Google Groups, search for Top Down Trader, and let us know how you want to be contacted. Still recruiting for my live meeting. I'll probably have to stop recruiting and give them the final list on the 15th. So we got one more week. I still got 4 or 5 spots in the room. It's the Marriott Palm Beach Gardens, 2-pack days of education and software. It's $12.50, including all your meals. We'll go a dinner cruise on Sunday night. If weather permitting, if not, I'll take you to a nice steakhouse on me. The hotel's $155 a night. I like running small groups so I can personalize it. And frankly, I'm not running the meeting because I make money on the meeting. I try to run the meeting at a break even. I like interacting with folks and I like being live in a room and talking about stocks. There is a rebate of $400 that anybody that pays the $12.50 will be able to use for future meetings like next October or to buy my tools if they don't already have them. Know your news and earnings. So as we've talked about, lots of Fed heads. I don't think they did much today. I have to go back and listen to some of them. Minutes come out tomorrow. Again, what surprise? Every Fed head's been talking their book. So I'm not sure that'll be any surprise. It'd be nice to get the jobless claims on Thursday, but yellow is for caution because, hey, unless the government turns back on, it is we're not going to know. And then you got consumer sentiment coming on Friday. But tomorrow's just a big day of news. Earnings, we'll start to see Delta coming soon, and that one will trigger the beginning of the next earnings cycle. As I always say it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about anything I talk about, my thoughts on the market, you want to agree, you want to disagree, you want to know about my software, you have a question about one of my signals, marketmripro@gmail.com. I'll respond personally. If you own the program, you have any issues. If Windows thinks it's a virus, Praveen at coding@marketmripro.com. All right, let's go take a look at the market. So, I watched my portfolio today, and today was a day why I bought some protection. And again, I bought enough protection to keep me from a lot of pain if we go down 5 or 10%. Beyond that, I'll be out of the market already. And since we went up a little bit since I started buying the insurance, I took a little heat, but then my insurance kicked in. And so it reduced by 50% my negative today. Not that it was a big down day. And, if we continue lower, I'll be happy I have it. And if we pull into the 17 and bounce, or we give a reversal candle, I'll get out of my protection. It's insurance. And like I said, I don't want to use my life insurance yet either. So volatility was up today, no big surprise. The dollar was up 0.5%, and then everything's down. Diamond's 0.19, Spider's 0.37, Q's 0.53, and the Russell, which has been leading, was down 1.07. And Bitcoin, which has also been in a nice rally supporting my stocks in the market, was down 3%. Everything except for the dollar finished at the low of the day. If we look at the new highs and new lows, you'll see a ratcheting up of new lows compared to yesterday, and the new highs minus new lows, although still positive, are much lower at 52 weeks on the NYSE and the NASDAQ. From a participation, you can see the number of sectors up and industry groups up compared to the prior day is lower across the board, and only 27% of the S&P 1500 were up, 30% of the NASDAQ were up, and 28% of the NYSE were up. When I look at the S&P 500 sectors to see if there's any place to hide, staples, energy, healthcare, utilities, we call those defensive. We call those defensive. Um, the things that have been leading, discretionary technology, communications, were all down. In fact, after the first 4 or 5, the bottom half were all down today. If you look at what themes were working, well, the first thing is it's only the very top. So we had cannabis, we had preferred metals, mining, renewable energy, oil, gas exploration, MLPs, telecommunications, aerospace and defense. And really at this point, biotech was a break-even day. So it was a weaker day. Let's look at the internals. Start with my timing model. So the first thing to point out is one of the two features to reverse to a sell signal. And this is the daily. This is the short acting. It's not my dominant trend that I watch, but it gives me a signal of what to do. We lost the bongo today. Now that can flip tomorrow. It's a very quick flipping, and you could see kind of a bearish engulfing patterns across spiders and the Qs. Um, Not on the. Oops, let me go back. Sorry about that. I have to stop playing with my mouse when I'm talking. Not as much on the IWM, which is the worst performer of the day, and not a big move on the diamonds. We notice the buy sell signal on the daily is still a buy throughout. And interestingly, despite the negative day, we set an all-time high on both the spiders and the Qs before selling off. Now, if we look at the weekly, this is one I pay much more attention to as far as a driver of my main part of my trading portfolio. When they're all buy signals, the daily, weekly, and monthly, then I'm going to look at the level of divergences, the AD lines, etc. But I'm going to be almost always long. When I start to see the divergences getting worse, I start to see 13-week new high, new lows getting higher, I'll start to get a little bit nervous. And then when we start to flip on the daily signals, I start to pull back some. So we're in a process. And here's the weeklies. You can see on the weeklies that they're all still in a buy. The bongos are still blue, and I'm not going to look at the monthlies. And you can see we've had a big run and we haven't had a big correction. Let's take a look at the US index ETFs because I think that's important today to get a sense of how bad today was. So here's the market off the bottom. Let's make it a little bit pull back here. And so seasonality is not bad, certainly not taking us down. I've talked that I expect at some point a pullback at least to the 17. Maybe we're on our way there. And you got the 50 underneath. At the 50 is at 648, and we closed at around 669. So we're 21 points. It's 3.5%. I mean, if you can't weather a 3.5% pullback. So do I expect us to go there? No, I expect us to bounce off the 17 or to undercut the 17 and go higher. But who am I? I don't know for sure. I don't have a crystal ball. But I know that I'm going to be watching this and I expect a bounce. If I don't get the bounce, that's going to tell me to be a little bit more concerned and probably raise more cash. But did anything really break down today except an ugly candle on the spider? No. If I look at the Qs, same basic story, big uptrend. Again, ugly looking candle, no way about it. It's only down 0.5%. Seasonality is fine. Still got the 1750 for support. I'm not hanging crepes yet. Like, I don't think the patient is dying. Could be. And I am an oncologist, a cancer doc, so I know all about that, but I don't think so. Again, here's the diamond, same pattern, a little bit of a consolidation, maybe a little flag forming here. Seasonality is strong. Am I ready to say it's over? No. I have said before, um, topping is a process. We could be in that process right now, and bottoming is an event. Sometimes it's really easy to pick a bottom. At least it's easier for me. Seasonality on the Russell is kind of flat here, but it's not negative. And again, even though it had a significant sell-off over 1%, didn't break its bongo trends for either daily or weekly, and you're still above the 17. So I would sum it up by saying rough day. If you were long, you probably took a little heat, but I'm not convinced we're done going up. Now, put this in the negative column. I've been talking about this cup forming here, and here we are up another percent. So considering where we were in the VIX, this is not neutral. We were living down here. So the VIX rising, that puts a little bit more concerns on my um, thesis on what the market's going to do. And then we have the dollar, which is another problem because the dollar is breaking out here. Now, let's keep this in the context of where the dollar has come from. Yes. So that is nothing. I'm going to watch now to see if the dollar can break the 200. If it breaks the 200, I hope it does it this coming week because I'm going to Germany and it'll make things less expensive. My guess it's going to fail at the 200, especially with the Fed leaning towards cutting, but I'll be watching the dollar. A weak dollar is good for the markets. A strong dollar is probably good for the country, but may not be so good for my stocks. Speaking of stocks that care about the dollar, let's look at commodities. Now, I hate beating you up all the time, but um, you know, you got to be remembered for what you can prove. And everybody tells you how they do and what they told you, but I told you to buy gold right here on this base breakout, and I thought that was a beautiful, beautiful move. Um, and it's getting long in the tooth, but my God, it's you look at the high-low jump, it's at 100. So it's at risk of a pullback. It closed above 400 or got above. It did close above 400, didn't it? I know it got above 400 during the day, but our gold got above 4,000. But man, GLD looks great. And again, it's getting extended. Would I buy it up here? I'd wait for a little bit of a flag to form. You got something in here, you got something in here. Probably going to get something up here as well. But gold has been great. That has also helped my portfolio massively. And you can go back to the video that I told you to buy it. And then silver had a big breakout here and done the same thing. Silver actually had as what John Person would refer to as a low close doji today, which is a pretty bearish candle. So a pullback to the 17 would not surprise me there. On the energy front, not to blow these up because they're not doing anything. Oil's oscillating around its 200-day moving average. Natural gas pulled back towards the 50 and bounced. There's a lot of natural gas talk today on CNBC. Maybe that's stimulated. I want to go to about 75 candles here. So looking at the 10-year and the 30-year, after coming up and threatening to get to the 50, they reversed lower, down 0.84 on the 10-year, 0.67 on the 30-year. So that's positive because if you're long the stock market, you'd like to see rates come down. If you're looking to buy a house, you'd like to see rates come down. Buckets. Remember the buckets? We take all the stocks in each of these indexes. We look at their percent B. The percent B defines where they are within the Bollinger Bands. There's 10 deciles between number 1 and number 10. And then I have a decile 0 where I put stocks that are below the Bollinger Bands, and decile 11 where stocks above. So you could see this was yesterday on the NASDAQ. The NASDAQ weakened and we started to build up below. Now the number below at 14, 15, 9, and 18, probably not a signal yet, but could be another day or two of weakness before it gives you a really good go long signal. So wouldn't it be perfect to pull back to the 17 over the next 2 days and give us a buy signal? So right now I'd say neutral to negative on the buckets, but not negative enough to tell me to go out and start buying. All right, the next one of the things I like to look at is market breadth. You can see the NYSE and the NASDAQ composite. You can see the all-time high. Sorry about that. I'm getting a good night kiss from my granddaughter. Did you see the moon? Okay. It'll be there in the morning. Sorry about that. So we did have, you can see the breakdown on both of them today. Now, if I want to find things that are ugly, well, stocks above the 20, 50, and 200 all turned down in the NYSE and the NASDAQ. So decreasing breadth. And you can see that the new high, new lows were still positive, but the AD lines turned negative and very negative on the NASDAQ composite, as was up-down volume. Um, you keep wondering if we're going to see more Hindenburgs or something else. Nothing fired today yet. Sometimes I get a later data update and I don't have volume yet. That comes in later on this as well. If I look at the other market breadth tool that should be pushed out or will be pushed out, you can see that 13-week new high, new low, 0.68, 0.55, 0.41, and 0.50, neutral as can be, no signal. And you can see that we have turned down on the RSI pretty much across the board from lower peaks. That is a pretty massive divergence. And again, something that I can put into the category, maybe I should be more worried. And this reason why I shorted, actually I shorted calls. I didn't buy, short calls or buy the puts. I bought puts on the diamonds, TNA, and the triple Qs, TQQQ. All right, leveraged triple Qs. If we look at ratio charts just to see what was working, um, well, technology is still holding up well. Communications come down and healthcare is still holding up. Look at the move on utilities, both from a defensive perspective, and you can see a little bit of movement up on staples. Real estate, not so much. But I think the other reason is still the data center energy story, which you hear over and over and over again. And I think the reason why natural gas is getting a bid is because they talked about today how natural gas will be powering most of the electricity generation for the data centers, despite all the talk and excitement about the future of nuclear. So I know hard for me to look at a lot of stocks to buy on the long side. Let's just look first at the contras, and then we'll go look at the top down. Somewhere in here, I've got, sure it's right in front of me. There they are, contras. So the dog goes up when the diamonds go down. It's still not a beautiful picture to buy. And the reason why I shorted the diamonds, which are, I mean, this is such a cheap stock in a horrible downtrend. And again, I don't mind if I lose money on my insurance, but I'd rather short something that's $468 than buy something that's cheap. SOXS will go up if semiconductors go down, and there's no signals here. SPXS will go up if the S&P 500 goes down. Praveen, if you're watching this, we had a split. We have to adjust for the split. SQQQ will go up if the Qs go down. So I went leveraged on a couple of these things just because, and here's TZA, that will go up if the small caps go down. So you really don't have buy signals yet on the leverage ETFs. And again, I didn't buy them to put my money all short. I bought them so that I can ride down to the 17 or 50 and not panic. Not that I panic anyways. Um, all right, let's go back to the top-down view. So everybody knows the story, but let me just review it. We had 3,929 stocks. Wow, it's NYSE plus NASDAQ plus Amex filtered for $1 and 100,000. So today we had 3,929 pass. Every one of these stocks is going to be in a sector and an industry group. There's no blank spaces there. All right. So if I go to a top-down perspective, I'm not looking at the S&P 500. I'm looking at the Jeffrey 4000, and that may vary from night to night. If I look at what was working to the long side, which I really don't expect to see something I want, utility, staples, and energy, and healthcare was fourth. Since healthcare has got a higher two-day momentum, I'm going to take healthcare instead of the defensives. These are the industry groups that are in the top sectors. I'm going to look for return. And I'm going to take the 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And then I've got 540 stocks. And I'm going to come down here and I am going to put on filters for 5 and 500,000 shares. I'd like to buy things that are above the 200. And I really like pullbacks and uptrend. And that's going to give me how many stocks? Only 49. So I could rank them by percent return. And I know I'm not going to do anything with this thing. Anything that's up 383% in one day is not something I'm going to want to be buying. Got to wake up the data vendor. Yeah, Praveen is working to improve the speed on that first stock because once I get it loaded, as I go down the list, it's much faster. And I'm looking for things that are actionable to me. Um, that's interesting, but I don't understand this day. I'd have to know more about it. Looking for things in a base that are starting to move. So Dyne Therapeutics, don't know anything about it. It's a relatively cheap stock, but it's been basing for quite some time, and it had a person buy signal on decent volume, breakout momentum, and it looks like the relative strength is crossing up, and the OBV is about to. Just not a great looking chart. CDZI, that one's broken out. These are all cheap stocks. You notice that? ARQT, Biotech. Here's one that I'm playing, and uranium remains on fire. I decided to buy UUUU because I could buy more of it than CCJ. I'm not sure if that was a good choice or a bad choice, but frankly, if you look at CCJ, kind of looks exactly the same, maybe a little bit smoother uptrend here. So uranium remains strong. APLS, their news today is they're breaking into a royalty play in a drug company. I don't, here is a waterworks. And I'll just go down the list looking for a stock that has a pattern that I like. And sometimes we find one, sometimes we don't. And on a day when most of the stocks are down, I'm not expecting to. So here's Ardent Health. This is one that we saw over the weekend. And with the breaking above the 200, this is another one of my buy sell signals. And then a higher move on Monday and even up today. So this might be one to take a look at. And look at how relative strength is separating from the moving average, how volume is going up. Actually, this showed up in one of my new scans. Volume breakout momentum coming out of a squeeze. So I like this one. Keep going down the list. Here's that CCJ. Cencora, McKesson, and Cardinal took a little heat. But if this market sells off, notice Cencora is right back to near all-time highs. And McKesson is one of my favorite stocks to own in bad markets. And why do I like McKesson? I mean, I just love showing you the weekly on this. I mean, that's from 200 in the lower left to 800 going back to 21. Who needs NVIDIA? Buy drug distributors if you think the market's in rough shape. Cars we looked at over the weekend with a big breakout. It keeps going. I don't know anything about it. I'm looking for basing stocks with some momentum signals that come in. BIPC, I think this pays a big dividend. A infrastructure play. Is this? This one doesn't have the fundamentals, so there's a different version. Oscar Health. This is one we talked about this weekend as well, breaking out. So, and then the other one we've been looking at each day has been Humana, which I liked. And what did Humana do? Bad day in the market, it was flat. That's not too bad. So that's how I do top down. Am I expected to find anything I love today? No. Now, another way of doing it, excuse me, is to, kill the sectors and then just take the top 10 industry groups, being, ignoring the sector name. And you see regional banks is one that pops up. Regional banks yesterday looked great with Comerica being bought by Fifth Third Bank, and that sort of made, I thought it said regional banks. Oh, regulated water? Maybe I need to wear my glasses. Ha! Yeah, I didn't think regional banks were there. All right. The other thing that I do is I like to go, and again, I'm not looking at a lot of things to buy today. The market's got to sort itself out. I'll go to my main list of that 3,900 stocks, and I'll start with my favorite scan, which is 2 days Momo up, $5 price, volume of 500K, hit OK. Just look at these stocks. These are the stocks that I look for. Here's a regional bank breaking out. Look at that massive volume coming in. Look at relative strength breaking out and volume. CTRA is a energy play. Is this an explorer? You could always look for news over here. Results are coming November 4th. Natural gas play. Okay. FIG, this is the guys that this is the stock that came out, went crazy and cratered, an IPO on the AI space. Figure, another IPO. Gore's another IPO. Orb's another IPO. I don't know this guy from Adam. It's kind of a cheap stock and it's another IPO. So what does it mean if the only things that look good on the scan is a regional bank and an energy play? Of the two, I like the regional bank. Why? Long base, lots of volume, my double momentum signal, relative strength and OBV. Now, you're going to look up to the top and say, but Jeff, it's extended. No, it's not. The max here is 50. It goes up to 100. So it's not extended at all. I like that one if I was going to buy something. It might be a place to hide. Does it pay a dividend? Let's go up into the fundies. And you can see good earnings per share growth over the last year. Good revenue growth. Lots of surprises. I like that. Trades at a multiple of 11 and it's growing 26 times on earnings and it's growing huge on revenue, pays a dividend 3%. I like Bank United. I'm going to do some work on that tonight in case this market shows any positivity tomorrow. Another thing you could do is I pre-built two scans. Let's look at those. One of them is called the A plus scan. You can run it on any list. And the only one that made that list, it's a tight scan, was Bank United. The other scan I built, which is also a tight scan, is my A stocks. And you could see some overlap, but let's just quickly look. Aniline Pharmaceuticals. Well, it's expensive stock, so caveats there. It is starting to make money. It's going to have 10.10, 10.30, $1.39 versus losing 50 cents. 94 million in revenue versus 50. That thing's exploding in growth. It's got a pretty significant PE, doesn't pay a dividend, so it's a biotech that's got a new product on the market. A big breakout here basing, and a lot of times when these things run into the 50, they take off. And you have a momentum, a breakout from a squeeze. Relative strength and OBV are supportive. I like that. Here's the same Bank United. I think that's still interesting. EL is Estee Lauder. Now, I don't think there's been a takeout. I'm pretty certain there's no takeout, but my goodness, nice move up, a base, breaking out from the base. It's got a John Person signal. It's got some volume. It's got a breakout and a momentum from a squeeze. Look at that relative strength breaking out. Boy, Estee Lauder looks good. Royal Caribbean, Rogers Communications. So this is a telecommunication stock. It probably pays a dividend. It does. It pays 3.1%. Canadian company, if I remember correctly. EMQ, I don't know. Oh, this is that Canadian rare earth metals company that Trump said he's going to invest in. And then Veristem, this is a stock that I know very well. And I talked about it a while back, saying that they had a drug that looked interesting. I think their drug's been approved. And I remember saying that their stock is way undervalued when you look at their market cap compared to other companies, 185 million compared to other companies that have one or two drugs on the market. I still like Veristem. I like the pullback here, bit of a flag after a run up, a bounce at the 50, and that might be another one. So look at that lousy market. My A trade scan still works. Have an awesome day. We'll see you tomorrow night.